Hi everyone, I'm Park Se-jung, your host for this special interview. Today we have a very special guest, Mr. Thierry Dissaux, the former chairman of France's Fonds de Garantie de Dépôt et de Souscription, or FGDR for short. He will help us understand what the FGDR is and how it protects investors. Hi Mr. Dissaux, how are you?
Good afternoon, fine. Thank you very much. And congratulations for your French. Absolutely excellent.
I did my best. Okay, could you briefly introduce yourself?
I was a chairman of FGDR for 15 years.
Wow.
So I started with FGDR in 2010. It has been a fascinating experience for me. Before that, I used to work in the French Treasury, Minister of Finance, but also in the banking industry. And this experience as a deposit insurer and an investor compensation scheme was a kind of, I would say, reward for me, what I learned in the banking industry and what I wanted to do as someone interested in public interest. 3 or 4 months ago, I retired at that time.
Actually, this is not your first visit to Korea, right?
The first time was in 1991.
Wow.
And it seems to me that Korea has changed a lot and in the right direction. And probably my last time was, I can't remember exactly, was with KDIC in 2016 or 18 for a magnificent event that you organized at that time with EIDI.
So do you like Korean people?
Absolutely.
Really?
Indeed, it's a pleasure to be here. And I was delighted to receive that invitation from Chairman Yu, who knows France very well, as you may know, and speaks perfect French, much more perfect than my English, and of course than my Korean.
I'm really happy to hear that, and we love French people too. Okay, now let's get down to business.
Could you describe the circumstances that led to FGDR's establishment and outline its main responsibilities?
Well, FGDR was created in 1999, and it was at the conjunction of 2 specific events. First one was actually a new directive in the European Union environment, which set the principles of the organization of deposit insurance schemes in the EU. And the second one was actually a banking crisis in France at that time, which was a locally systemic crisis, which forced us at that time to try to unify all forces with a unique deposit guarantee scheme. So in 1999. Now we are in charge actually of 4 protection schemes. Deposit insurance first. The second one is investor compensation for investment firms' clients. We have a second investor compensation scheme for asset management firms' clients. And the fourth one, which is so typically French that I won't elaborate more on this. And maybe a last important element to mention is that we are in charge of compensating depositors or investors, but also we can act preventatively before the failure of a bank or an investment company, and we have resolution powers. So as a whole, if you take EIDI definitions and standards, we are a loss minimizer.
What is the role of investor compensation in the broader financial system, and why do we need these safeguards?
That's interesting. I would put it another way, actually. Why would we make any difference for securities business, for investor compensation? In my view, financial activities are necessary for the development of the economy. And then they have to be encouraged. At the same time, they are complex, and they are complex for consumers. And this is why protection brought to consumers is helpful to offer some more reinsurance to customers, and then for the development of the economy itself, the financing of the economy. So I would say, as long as a financial activity is a sound activity, as long as it contributes to the development of the economy, it should be encouraged and then protected. And only if an activity, a financial activity, makes little sense or does not encourage the development of the economy, then it does not need to be protected. But securities business is something, in my view at least, which is absolutely essential for the development of the economy, and then investor compensation makes a lot of sense, at least to me.
And FGDR is responsible for protecting both bank depositors and securities investors in one place. And what do you think are the advantages and limitations of an integrated protection scheme? And why did France choose an integrated protection scheme model?
I would say there are several elements. Let's mention one of them, which is not the most important, which is universal banking. In France and in Europe for a large part, we work in a universal banking model, meaning that banks are also involved in securities business or for a part in life insurance business and so on. So with this integrated model, it could make sense to have an integrated protection where consumers don't have to make the difference between if it's about their deposits or their securities and so on. But I would say this is not the main element. And if you look at the European landscape, actually, even some countries which practice the universal banking business do not have an integrated protection scheme. I think that the main reason to set a protection scheme is to be aware of the synergies between the deposit insurance protection business and the investor compensation business. They share a lot in common. First of all this is about crisis, of course. And a banking crisis is not necessarily different in terms of management than as a crisis for an investment firm. Communication crisis, crisis management, risk management, contributions, regulations, all these activities, which are core activities for a deposit insurer, are also core activities for an investment protection scheme, in my view at least. So these synergies for me are really what justifies this integration of deposit insurance and investor compensation.
I see. The synergy means a lot, right?
Yeah.
And thanks to your explanation, I understand the similarities and why they're grouped together. But I'm curious, though, what are the main differences between your deposit guarantee and investor compensation schemes? And what do you primarily focus on in which operation?
Yeah, of course, you're right. There are differences. Usually, investor compensation cases are fraud cases, at least in our system. Because investor compensation is triggered when securities or cash are missing. They should be somewhere, but you don't know where, and they should be compensated. When it's about deposit insurance, it's a matter of bankruptcy. The bank is not viable any longer. And then you have to step in and to compensate. But you can nearly immediately assess the claims of consumers, of depositors, and you can compensate them very quickly. For the investor compensation business, you just know that things are missing. Things meaning securities or cash. And you have to identify actually exactly what part is missing, what part stays in the hands of the investment firm, knowing that usually, as these are fraud cases, the accountings are fraudulent, and that also securities and cash could be in the hands of sub-providers or sub-providers in your country or abroad. So it's a very complex business that takes more time. For me, this is the main difference. But this does not prevent us in FGDR to have the same team, a unique team, to handle those cases, whether they are deposit insurance cases or investor compensation cases. Different.
So investor compensation case is all about like after accident, you mean? After something is missing or
Yes.
some...
It could be, there are probably two cases, at least in our regulation, in European regulation, I don't know here. It's either because of an IT failure, and then you don't know where securities are or how many securities you have, because every accounting have disappeared somehow. Or, and generally this is the case in case of fraud, meaning that, for instance, the management of the company used their powers to take some securities, put them in some other places, and then when customers want their securities to be back, well, there is nothing.
Oh.
And so the regulators will review the case and probably trigger the investor compensation scheme. And then, again, we know that some securities have disappeared, but we don't know where, we don't know how much, how many, which depositors, or for which investors, I should say. So the main business for the investor compensation scheme, at least in our regulation, is to rebuild all the client accountings, client by client, securities by securities.
Then could you outline the FGDR's protection framework in terms of its scope and compensation limit and compensation record as well?
To stick to the main figures, FGDR has aligned its standards with the EU ones, which are compulsory for us, for deposit insurance. So for deposit insurance, it's we compensate up to 100,000 euros within 7 working days max. For investor compensation, the European rules are much more flexible. We are at the upper end of that protection with 70,000 euros for missing securities and up to the same amount for associated cash. Dividends or current accounts and so on. But I would say this is only a part of the game because we were lucky enough or maybe insistent enough to have the opportunity, FGDR, to draft our own regulation. At the time, that was 10 years ago, we really pushed the limit of the protection to offer customers the most possible, the most extensive coverage that we could offer, refining the details, and so you would have to look at many details to assess the exact coverage.
All right. And how does the FGDR fund itself? I mean, for example, what is the fund size and how does the FGDR collect contributions and how is the fund managed and invested?
We have, as for deposit insurance again, our reserves are equivalent to 0.5% of covered deposits. Meaning in France 7.5 billion euros roughly. And for the investor compensation scheme, the total reserves are roughly 175 million euros. These reserves are partially managed on the markets but since 2022, a part of our reserves are deposited in the French Treasury in a special account. The remaining reserves are invested in bonds, sovereign and corporate bonds. Before 2022, we had also an equity exposure. I think there is a very specific feature with the French contribution system. The bulk of our contributions are what we call stock-based.
Oh, stock-based.
Stock-based. It means that instead of raising annual contributions with an annual premium rate as a flow, instead of doing this, we actually require from all member institutions to participate to the financing of a portion of the stock of reserves of FGDR each year, depending on their say market share in terms of cover deposits or in terms of risk. Each year we look at the total reserves, and these total reserves are actually split among all participants, and the change of market share of each participant will also change their share in the global financing of the total reserves. So that's what we call stock-based contributions, which is quite unusual, but a very powerful system, I can tell you. The impact of this is that the reserves of FGDR are constantly adapted to the risk they cover. So if an institution, for instance, sees its market share increasing, or if the risk of that institution is increasing, then it will pay more, but not only for an annual flow, but for the whole reserves.
Yeah, it sounds really powerful. And we understand that FGDR's compensation process is initiated without the failed firm's customers having to file claims. So could you expand on that?
That's for deposit insurance, because for investor compensation, as I said, we need to investigate a lot before being able to compensate. But for deposit insurance, we have developed, as many other players in Europe, a single customer view process. We call this SCV. It means that we have worked with all French banks in order to be able to get at any time, or at least when they go bankrupt, the exact claims and the details of the claims of each of their clients. So it has been developed over years, and we test FGDR test their capacity to issue those SCVs, single customer reviews, on an annual basis, to be sure that it could be the case. Is able to get the details of the claims within a few hours or a few days, depending on the bank. And then it can issue those data on an internet platform towards the clients of the failing bank, and compensate those clients on this basis, on this detailed information basis, without any prior communication of any identifier, password, and so on. Meaning that this internet platform actually has been totally secured with using the data of the bank's clients that only those clients know. So these are confidential information, but on the basis of this confidential information, we can be sure that a person is really a client of the bank, and then can get access to his or her data and be compensated just introducing a new account number.
And looking beyond national borders, the FGDR is actively participating in the activities of EFDI and IADI. And international cooperation would be particularly variable for countries in Europe given the EU-wide financial regulatory framework. So could you tell us what specific efforts the FGDR is engaged in, like to enhance cooperation with international organizations and other agencies?
Let me start with a personal note. Actually, I've been convinced from start that international cooperation was absolutely key for our businesses. Even if we have to face a number of crises, at the end of the day, we, at the national level, we still have few experiences. And this is why our experience, the way to build things, the way to think over our business or project, the best way to do this is actually to go abroad to discuss with our counterparts all over the world. We have a collective experience which is far larger than any national experience. Even if our banking system and so on are different, we learned a lot discussing together. And so I'm always a candidate to to discuss and with my former counterparts. As for FGDR, we have been involved, as you said, very strongly in international cooperation. I would have three axes maybe in mind that had been FGDR's priorities these last years. First, what we call, it's very European, the Crisis Management and Deposit Insurance Framework, nicknamed the CMDI framework. It's a key element of cooperation between EU institutions in charge of resolution and national deposit insurers. So that's something where FGDR and many others were deeply involved. Otherwise, we are always involved in EU regulation, both for deposit insurance and investor compensation scheme, because I mentioned this earlier, the details of the protections are really key if you want to offer consumers the best possible protection. I should give an example for this. In France, and maybe in one other country in Europe, we can offer a double protection, for instance, to a person who has personal accounts on one hand, but also professional accounts on the other hand. We see that person as two separate persons, a businessman, you would say, or woman, and an individual. And so we say you have two activities, and so you have two coverage. This was not exactly in the EU regulation, but we were able to put this in our regulation. Well, coming back to your question, so EU regulation is key for us. The third element is actually investor compensation. I realized years ago that this domain was really one in which European players had a lot to share and to learn together. We are lagging behind deposit insurers in that field. EU cooperation among deposit insurers is really well developed. We have to make a lot of efforts to develop these cooperations for investor compensation.
And I have another question. These days, the financial industry is going through rapid changes, driven by innovations like fintech and cryptocurrencies. And we're interested to learn what institutional improvements are being pursued at the FGDR to keep up with emerging trends, especially in digital banking.
Financial innovation are, of course, very important. We have to follow this. We have to be very cautious and totally aware of those developments. That's key. With my somehow long experience, I'm struck by a few things. First, financial innovation does not necessarily change the stance for a protection scheme. Uses a blockchain, for instance, to do some business. Whether it is in the securities business, the banking business, or the life insurance business, it will still be a bank, an insurance company, a life insurance company, or an investment firm. And then, of course, the technology is not the same. It will probably gain some market share, change the way the business is conducted. But for the protection scheme, you have to demonstrate that there will be a difference. And probably, in my view, differences are not always obvious or not always frequent. Same for fintechs in general, by the way. I would make an exception for a business which appeared in the EU maybe 4 or 5 years ago. I don't know if it exists here in Korea. It is what we call deposit brokers. So deposit brokers, it's they could be banks or not, by the way. It's an institution which will collect deposits from customers all over the EU and will put this money within individual account in, say, risky banks, but under the 100,000 euro coverage limit. It will promise high rates to customers and use the coverage limit in the EU to actually finance banks that should not be financed because they are lacking money and they will pay high rates and they are risky, basically risky. They are paying high rates to get financing, to get those deposits. But they use the EU coverage limit to build their business. So this is something that has, in my view, to be monitored closely. Some of the most important banking crises that we had to face, not in France but in the EU, those last years, came from those deposit brokers. I think that one of the things that FGDR was looking at before I left was the possible impact of instant payment. On one hand, instant payment could facilitate our single customer view process because it makes in-flight transactions, I would say, less numerous or even inexistent. So that facilitates the job and also the control we can make on this. On the other hand, a deposit insurer has to look at a way to use instant payment to compensate depositors more quickly, I would say. There are already some standards in the EU for banking transactions, which should be developing more and more, yes.
Yeah, I see. Thank you. This has been insightful, and thank you very much for sharing your insights with us.
It's a real pleasure for me. Thank you for your very interesting questions.
Thank you. All right. This wraps up the interview with former chairman Thierry Dissaux of France's FGDR. Thank you very much for watching.